But a view for 2014, Ramesh Damani joins in. Good morning, Mr. Damani. Thank you very much for joining us. Well, you know, December, why December? October, November, December gave us the hope that perhaps we have definitely put a bottom. And then there were some very brave calls for the first half of 2014 as well. Yesterday kind of rattled everything, the way in which stocks fell in the second half rather rapidly. What's your overall outlook in 2014? What did you make of the kind of bottom fishing we saw in the last quarter of last year?
Good morning, Data. Nice to be on the show. Good morning, Sonia.
Hi, good morning.
Good morning. It's a winter squall. It passes away. You know, we tend to forget that we've had actually a very nice 2-3 months with great underlying strength. That corrections in bull markets do happen, and I think that was a correction. That's the way we chalk it up right now. I think we remain optimistic because, you know, we see all the classic signs of a young bull market emerging, in the sense that there's a lot of skepticism, a lot of people on the sidelines. Any correction makes people get out for the exit doors as fast as possible, but market is not reacting to bad news. Gains are being shown by investors despite the skepticism. So the market is looking ahead, maybe ahead to the new general election, maybe ahead to an economic recovery. I'm not sure, but the breadth of the cash section has been as good as I've seen it over the last 5 years. And there's a lot of money being made right now on the Dalal Street. So you'll find that nobody on the Dalal Street talks about policy paralysis anymore, or nobody talks about, you know, people are busy trying to find stocks that will benefit from the upturn. So, you know, there's reason to be optimistic as the new year unfolds.
Okay, you wouldn't be worried that in December we had a bunch of reasonably good news. We had the BJP win 4 out of 4 actually, though of course another party went to form government in Delhi. As well, you had tapering, which was fairly well received by the financial markets. FIs didn't leg it out, the currency didn't do a somersault. But in spite of all that, what are we month on month? With that bunch of good news, we were, you know, at an index level just about 1%. So is it that this is going to be more a stock pickers market? Your optimism will reflect more stock-wise and not in the index?
You know, I always tend to look at the market in a stock pickers market, whether it's index is going up or the cash is going up. You always do a bottom-up type of stock investment. So I'm not necessarily comfortable making these big macro calls as to what's going to happen tomorrow, as, you know, Goldman Sachs might do. But I can only tell you from my experience, Lata, that the undertone of the market is very healthy as I've seen it over the last 4 or 5 years. There's money to be made. There's a lot of skepticism in the market. And the buyers are gaining. I mean, if you bought stocks in December, you showed sharp gains in a number of stocks, as you yourself point out ever so often. And I think this is the classic signs of the early stages of bull market, where you know, gains are made, and then there's a left out feeling, and the public starts coming into the market, which I think will happen over the next 3 months or so.
Oh God, I hope that happens. We've been wanting the public to come into this market for God knows how long.
So do we as brokers.
We are running out of pessimistic objectives, actually.
Okay, so we don't mean to be devil's advocates, I assure you that, but just another follow-up to what Lata was saying. By the way, Happy New Year to you, and thanks for being with us on the show. You know, this market, although at the start of 2013 everyone was extremely bullish, but it's been so bipolar for a major part of the year. You know, IT, pharma, and even today people will tell you just put your money in IT and pharma and you'll be happy through the course of the year. Do you think that will change?
Yeah, I heard the preamble to this debate with Udian saying that this is a consensus trade going on in IT and pharma, and it is, but you know, a lot of people get early on the right sector, early stages of bull market. It's the people holding it through. I mean, a lot of stocks in a typical bull market will go up 10x, 20x, 50x. People don't realize that, or people have forgotten that. So the trick is not necessarily to identify the winning sectors early on, but it's to hold on through the bull market, these sectors. And, you know, unfortunately, I am with the consensus. I think IT and pharma is decent places to be in. There are other sectors too, but I think IT, pharma, good places to be.
Come on, exhibit some foresight, some gutsy behavior. No cyclicals at all at the start of 2014?
I'm not really a big one into cyclicals, but I've always liked media, as I've told you. Some of the stocks have started reporting good results. A sector that we bet on recently was logistics. We think this is a great contrarian call.
Okay.
Valuations are very undemanding, and we see great opportunity ahead as GDP recovers, e-commerce recovers, all these things happen. So, you know, there's a lot of, I mean, those are my choices. A lot of people have other choices too. So it's a good market to go out, look for stocks, find value. I mean, with inflation running at 9%, what are you going to go in a fixed deposit, Lata? I mean, you just need to go out and buy equities, and the returns for the last 3 months have made up for the pain for the last 3 years.
Okay, so just to persist with cyclicals for one more bit, not even private banks, because that is seen as an exception in the cyclical space.
You know, Lata, that's your forte. I actually avoided the banking sector. For some reason, I'm not comfortable investing, especially in the public sector banks, and I have very limited exposure in the private sector banks. So you're probably better qualified to answer that question than I am.
No, I only see the ugly NPL numbers at this point in time.
Precisely.
That is why I'm looking for optimism elsewhere. Yeah. Okay, let's look at the mid-cap space. That's a diverse space. They've clearly outperformed, especially in that in this October-December period. So over there, how would you go about looking for stocks? Would you even over there stick with IT? Is it the mid-cap ITs and the mid-cap pharmas that you like?
No, Lata, see, here's the point that I'd like to make when I look for mid-cap stocks is that I'm called a veteran of the last REITs because I've been in the market for 30 years, who knows how long, all right? And what is the promise? Why do we persist through these 5-year periods of absolute pain and torture that we go through the stock market? Because there's a rainbow at the end of the road. And what does the Indian market afford you? It affords you an opportunity. If you're a young man and India is a young country, you can buy stakes in various companies and see them over the course of a bull market to actually create serious wealth. I mean, for example, as you know, someone bought Titan Industries. It's a jewelry company. It was a 200 crore market cap. Today it's 25,000 crores market cap. It's over 100x move in a basic business. You all have Titan watches, but how many go out and bought the Titan stock? United Spirits, it was a 200 crore market cap company, it's 30,000 crores today. All in the period of 10 years. You could have bought HDFC Bank, you could have bought some great companies in banking, in alcohol business, in the jewelry business, all right? And you held the stocks to maturity, you would have made 50x, 100x your money. And that's how you get seriously rich in the stock market. You went through pain. In 2008, all these stocks went down 50%, 60%. But they were great businesses, so they came back over time. So the question is, if we are now on the cusp of a new bull market, as some of us believe we are, and even if you're not there now, we'll get there in the next year or so. Bull markets come in season. You want to identify the industries or the businesses that will be important for the next 5 years. And I'm suggesting to you that I would look at media. And I know most of my friends in the media are very skeptical when I say that. But the valuations are throwing it away. They're throwing away. These businesses cannot remain at these valuations for extended periods of time. Ultimately, the market will realize the value of a media franchise or a logistics business. I mean, you look at the boom in e-commerce that's going on, say, for example, in the United States of America, and you translate that back, maybe 3 years from now, we will have a boom in e-commerce, in online sales. Who's going to benefit from these type of plays? So you want to hold these stocks through that period. Now, if you're going to look at only on an earnings basis every quarter, you're invariably going to be disappointed and sell the stocks. So look at it from a market cap perspective. Look at stocks that are cheap and what kind of valuation. I hope you're not
talking about Just Dial.
That's the flip side of something that's already so expensive. It's a great company, but it's a very useful service. But at 10,000 crores, I'd rather pass on that.